Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. This is as usual the daily video research, and we will continue to talk about the euro currency, and we'll start from the daily time frame. Well, due to the previous week price action, there are some additional clues has appeared on the higher time frames, particularly on the weekly time frame, and based on that clues, that price action, we could say that in euros time we could expect the strong move to the downside and minimum targets around 138 area. So if you would like to know why I think so and what the clues that appeared on the market, I suggest you to visit our forum and read a weekly thread with the analysis not only daily time frames but also weekly time frame and monthly time frame. But this is the daily video research, and we will start from the daily time frame. Well, during the previous week we see nice strong move to the downside, and currently you can see that market has broken all Fibonacci confluence resistances areas that we have discussed during the previous week. That was 142.60 area, that was 143.70 areas right here. So market has broken it without any respect. This tells us that market is really strong. The bears are strong now, and we could count on some continuation to the downside. Also, you can see that market has broken that long-term on the daily time frame trend line and close below it. It's even continue move to the downside. So in general, you can see that daily trend is bearish based on MACD indicator. Market not stands at oversold because oversold's right here. This is blue lines, Jordan-Napier oscillator predictor indicator. It shows us level of oversold, stands around 140.30. It's right here. So, and actually there are no barriers that could stop market from the continued move to the downside, because oversold's right here. The next fib support is right here, 141 area roughly. This is 618 support from that low to that high. Also that is monthly pivot support 140.94. Coincides with the fib support area. Well, but to enter on the short side of the market, I prefer to use some pullbacks to open the short position. And the area that personally I like to enter short is right here. This is the nearest fib resistance, 143.22 area, the 38 resistance from the whole swing down. Why I like that area? This is, as I said, fib resistance. Also, this is the trend line, and we could see some kind of kiss goodbye pattern when market returns back and touch the trend line from the other side, then accelerates to the downside. This in fact could happen. Also you can see this is blue dash line is the weekly pivot point for the coming weeks, 143.06. Also this is the monthly pivot point. It's right here, 143.24. Also stands in that area. And as we said, market has broken strong areas of resistance, of support, previous support 142.60, 142.70. That was the confluence support on the daily time frame. It stands right here. So very common when the market has broken some strong area of support and resistance, such as the confluence support and resistance, it without any respect, then market very often returns back and retest that areas from the another side. So that could happen again, and that's why I like that area. Well, stop could be placed, for instance, just above that area. This is the weekly pivot resistance 144.31, and 144.11, the 618 resistance from that swing down. But I think that we will have the possibility to place stop even tighter, since returning back again the monthly pivot point, again the trend line will not support the strong strength of the bears, of the current strength of the bears. It will not be typical for the such kind of trading environment where the market shows really strong move to the downside and some deeper retracements and even move above the weekly pivot point, monthly pivot point, above the trend line again. This will not be in a row with the bear strength. So that's why probably we could even play somewhere between that areas above that strong area of resistance. And where particularly we could do that, let's take a look at the intraday charts. On the 4-hour time frame, we also see that trend is bearish, and we see that around that area stands 4-hour confluence resistance. It's not just a single resistance area, as we see on the daily time frame, it's also confluence. Since this is 618 resistance from that swing down, this is the hidden reaction point, since this is the thrusting bar, and we could build the Fibonacci resistance areas right from the thrusting bars, right like here. I mark it with T point, as you can see. Thrust also is this one. Okay, so that is create the confluence resistance that makes this area even stronger and give us more confidence that we could probably enter short from that area. On the hourly time frame, we see the reason why this retracement could start at all to the upside, and that the reason is this butterfly buy on the hourly time frame. Well, somebody of you could mark this butterfly, for instance, as maybe somehow another way, but I tracked this butterfly even on Friday before the non-farm payrolls release, and as you remember, guys, I posted on the forum that when market has reached this 127 target, they said that market has formed 127 butterfly buy. So somebody of you maybe has made some pips here during this jump out. Okay, but this is not the case currently. Well, you can see that market has hit 1618 target of this butterfly. And that is the reason for the potential reversal, short-term reversal and retracement on the daily time frame. The target of that butterfly is at least 127 extension from the whole butterfly move. From that high to that low, 127 extension stands right here, 143.27, just 4 pips higher than the 3/8 resistance on the daily time frame. So we could say that the target of this butterfly buy agrees with the area of resistance that we marked for us as the potential area to enter short. That is make this area even stronger. So how we could act in the beginning of the week, although Monday is a Labor Day in the United States, but maybe on Tuesday, how it will turn. Well, if market will start retracement to the upside, we should keep an eye on that area and drop our time frames to the 5-minute chart, to the 15-minute chart, and to watch that area for the potential sell signals on these time frames. When we see something, we could enter short with the placing stops, as we discussed. If market will fail here and continue to the downside, we should be sure that this butterfly has failed. And for that purpose, we need to see that market should pass to the downside additional 40-50 pips. When it will happen, when we could say that probably this butterfly has failed, and we could use the nearest fib resistance area on the hourly time frame to enter short, since all trends now are bearish. Weekly trend, daily trend, 4-hour trend are bearish. So if this retracement will not happen, then probably we need to be sure that this butterfly has failed, as the additional move to the downside will happen. Okay, at least 40-50 pips market should continue to the downside to say that this butterfly probably failed. Then we could use the nearest fib resistance from the swing to the downside, whatever it will be, to enter short. Because now we have strong bearish context that is confirmed not only by daily price action, but mostly by weekly chart. So this is really intriguing currently, and we can see the move at least to the 136.50, 137.60 weekly and monthly confluence support area. So that's my current view on the situation. Just keep your eye on the areas that we have discussed. Our context is bearish, so if it will see a retracement to the upside, this will be much better. If not, well, in this case we will correct our trading plan. As this move to the downside will develop, we will find some points to enter short, because this is move to the 136.50, 137.60 areas rather extended. So I think that we will have some additional opportunities to enter short if even this retracement won't happen. But still, as I said, if it will happen, this will be much better and more simple to enter short in that market.